Good morning, ladies and gentlemen, and welcome to the Impact Money Show. We're excited to be here with you this morning, coming to you live from the electric, ever churning epicenter of Washington, D.C. It's Monday, March 24th, 2025. And if you're waking up here in the Capitol with us, you're stepping out into a brisk 48 degrees Fahrenheit, the kind of cool that snaps you awake but doesn't bite too hard. The sky's patchwork of partly cloudy promise and a gentle breeze rustling through the streets. Perfect weather to grab a steaming coffee at the DuPont Circle vendor and watch the cherry blossoms tease their big reveal. They hit the pendulum of elongation phase last Friday, and the National Park Service is pegging peak bloom for March 28th through 31st, a spectacle that's not just a feast for our eyes, but also a cash cow for DC's tourism machine. Picture it. Tourists flooding in, snapping selfies, dropping dollars at every cafe, and souvenir stands for the tidal basin to Georgetown. From the tidal basin to Georgetown. It's a little economic spring fling amidst the chaos. But let's be honest, the real heat, the real fireworks are crackling in the headlines. And the markets today, money never sleeps, folks, and neither do we. So strap in, because we're about to take this plunge into the global financial roller coaster that's got everything from the Arctic standoff to the crypto moonshots. Before we cannonball into the deep end of today's money madness, let's rewind to last week, because holy smokes, we threw a bash that's still reverberating through the financial world. Bitcoin Palooza in New York City. If you weren't there, let me set the scene. The Big Apple transformed into crypto's beating heart, a neon lit crucible where Wall Street titans rubbed elbows with blockchain rebels. Over many of you packed into the sold out venue, traders, coders, dreamers, all buzzing with energy that could have powered a dozen Bitcoin mining rigs. The speakers were pure dynamic. They were just absolutely amazing people. There was, we had, it was really something else. Bitcoin is poised to rip forward into the stratosphere. And it really was something else. Of course, they're talking about all types of stuff that we were there. Let me just shoot this over to my good man, Matt Dixon here. Matt Dixon, Sir Matt. All right, go through here. It really was something else. All right, nostalgia's over. Let's snap back to today, March 24. It really is just flying along, isn't it? Let's see here. All right, there we go. The world's dishing out a smorgasbord of money moves that demands our undivided attention. We're kicking off with the globe teetering on the edge of markets humming with restless energy. Up in Greenland, the icy expanse is heating up faster than a microwave burrito. Prime Minister Mute Egede got his fist balled up, calling out the U.S. visit from the Second Lady Usha Vance and the National Security Advisor Mike Waltz as flat-out provocation. His words, not mine. These aren't casual jaunts tied to a delegation poking around a military base. They're wrapping up by March 29, but the vibe's anything but neighborly. Egede's scoffing at the cultural tour excuse, especially with Walls, a Trump loyalist in tow, and he's reading it as a neon billboard screaming the U.S. intent. Why is this a powder keg? Donald Trump's been banging the drum about annexing Greenland, a semi-autonomous Danish territory that's a strategic jackpot. Rare earth minerals for your iPhone, untapped oil reserves, and a prime Arctic perch for bases like Thule. Already flying the stars and the stripes. This flare-up lands smack in the middle of Greenland's post-election limbo. Egede's party took a bruising, and he's the caretaker prime minister until the new crew, led by the independent-minded Democratic as he takes the reign. Locals marched in Nuuk earlier this month, waving signs against annexation threats, and now Greenland slamming the door on U.S. meetings until the dust settles. Money-wise, this is a 5-alarm fire. Greenland's got a mining moratorium, but U.S. pressure could pry it open, sending commodity prices like rare earths and crude into orbit. Picture lithium spiking, oil futures jumping, energy stocks twitching. Investors are watching this Arctic chess match like it's the Super Bowl. Will it thaw into a profit bonanza or freeze into a geopolitical stalemate? It really is something else, isn't it? I have with me here the great Matt Dixon with the Market Watch Report. Sir Matt, how are you?
Hey, good morning, Bruce. Good to be with you again. How's everything?
It's been a little while. I actually, even putting the show together this morning, I ended up quite behind because all my tools were, this and that, and you know how things are. It's been a week, at least over a week.
Yeah, well, it's good to be back. There's, I've been continuing on X just to post what my thoughts. I'm just going to share my screen.
Amazing.
Why don't we sort it out? There we go. So that should be showing you the Bitcoin chart.
Yes.
Yeah, so I understand Michael Saylor of Strategy has been out buying again. I think he owns now a couple of $1 billion worth of Bitcoin. So about 2.5% of the total supply, which is amazing. Well, serious amount. And I think that's the reason for the Bitcoin pump this morning. So we saw Bitcoin, actually, we can see from this chart here, this is relatively long term. I'm looking at from the previous all-time high of 109,000. So we've seen a corrective move down. What was interesting, we can just about see, I'll probably expand it out in a minute, but we can see here some bullish divergence, regular bullish divergence here, basically with lower lows on the price and higher lows on corresponding RSI. That told us that the price was going to pump from this level, and that's precisely what happened. So the only thing is, it looks corrective because it looks overlapping still. So I think this is just an A wave down. I had this chart. I've not actually changed it from last week. I had this chart in place before this pump happened, and I projected or predicted that we get a B wave higher as we're currently doing, and then we should get a further C wave down. So I think it's a big ABC correction down. I think it's got lower to go. And one of the reasons I think that is the case, I'm just going out a little bit longer term, when you see a correction like this, which I think is a wave 4, a large wave 4, it normally corrects to the territory of the previous wave 4 of lesser degree. So we can see in red here, this wave 4 here from 3 to 4. So we'd expect the next correction in this cycle to correct to somewhere in that region. And if we correct down further, that's quite a bit further down potentially for Bitcoin, then it would take us to that territory. And we have enough uncertainties in the world going on. There's still a lot of uncertainty with Trump policies and so on. A lot of geopolitical uncertainty with Turkey. I don't know whether you mentioned that previously in your news.
I didn't get through much of my opening monologue, to be honest with you.
Okay. Well, there is a lot of geopolitical uncertainty, and even with Israel, and I'm reading all sorts of things about potential risks going on in and around Israel and the Middle East. So there's still lots of uncertainty to potentially bring us down with this price, but I just think it's going to be another buying opportunity. So I'm buying dips even from this A wave down. You never know for certain. The correction could be complete. So I'm dollar cost averaging. That's my favorite strategy, is to, especially with Bitcoin, of course. I think Bitcoin has so much support now from an institutional, even governmental foundation, that I think just all these pullbacks are just opportunities to buy and to add more to your portfolio. So, as I say, buying at the bottom of this A wave, if we jump up in a B wave, I don't mind. Then we get another drop down in C wave, or just add some more to the position. So I am looking to try to add more and more to the position. I just want to scroll out if I can here just to show you. Let's just see what's happening here. Yeah, I mean, we had, the correction which brought us down to the low of the FTX crisis here in the circled area. So that was the beginning of this cycle higher. So I think it's just the beginning of the cycle. If this is the case, and basically we've got 5 waves higher with the correction down now, it may not be a wave 4. but then following a correction, you expect a further impulse to the upside. So I am expecting, following completion of the correction, whether it's completed now or a bit further down the line, I'm expecting most definitely a new all-time high. So I'm still bullish the markets. A lot of people are becoming bearish. And at times like this, sometimes you can't see the reason why there would be such a pump in assets. It won't just be Bitcoin, of course. There'll be a lot of others that follow suit. There's high correlation with crypto assets, but even with the S&P. So I think we've still got higher to go with these markets before we see any major correction. So whilst there's a lot of negativity swirling around in the markets, I still think we've got higher to go. So we'll see. Just to scroll back out again a little bit, just to focus on where we're at and why I say I think that this is just a corrective move to the downside, and why I do think there's more upside to come. We can actually see that we've got a move down here and the move up here, then a move down here, but we can see this move up here overlap this move down here. So what I'm trying to illustrate is all this overlapping movement is telling us that this is just a correction down. It could even be the correction's complete, but I doubt it. I think we've probably got further to go with this correction, with a bit more upward movement and then further downward movement. But that's why I'm saying from here, I'm dollar cost averaging. And if we do dip lower, I'll dollar cost average some more and buy some more, because this looks very, very clearly corrective. It's telling me we've got new all-time highs to come. And that takes me over. I'm just going to jump over to Solana. And I've been saying for a long time now, as you'll remember in all the previous shows, that I am absolutely convinced. And a lot of people are losing faith in Solana.
Yep.
You know, there's been a big depression in meme coins. You know, Pump.fun. I know you're talking about Pump.fun the other day. Pump.fun has had a massive drop in revenues from millions a day to hundreds of thousands or even less daily. But I think this was just a downturn. We get a lot of volatility, especially in memes, and I think it could very well take off again. We do see narratives change, of course, within cryptocurrency, but I still think there's plenty more fuel in the tank for Solana to go higher. And I'm convinced because, as I said weeks ago, this initial move down was corrected with a triangle formation here that we can see A, B, C, D, E, a triangle. Triangles can't form in wave 2 position, so I'm concluding this is just a wave B position. So it's a big correction. It's basically an ABW, then an X wave triangle yet again, and then basically an AB. And I don't think we're finished on the Y. I actually do believe we've got lower to go. This looks like what I'm trying to circle here, if you can see, looks like a corrective move. It's not moving impulsively higher. It's kind of a shallow movement higher overall, and it's been moving since sort of mid to late March. It's been moving sideways and slightly upwards. I do think that we've got further correction to go. So that would give us a W, X, and an AB and Y to complete a wave 4. And then we push up in a 5th wave to new all-time highs. So as I say, I've been listening. I listen a lot to what people are saying on Twitter, on X. And there is a lot of negativity swirling around and people saying, that we've seen the all-time high, etc. But I would conclude that because of this structure down, which is very corrective in nature, it's not impulsive, it's all overlapping, it's got triangles, which are just consolidations. And even this movement here is just a consolidation pattern. It's telling us that, yes, there'll be a further move down, but being a consolidation overall, we should then get some powerful movement to the upside. So I'm not sure what's going to cause it. Maybe it's lower interest rates, and I keep a very close eye on interest rate expectations. We, of course, had the Fed rate meeting last week, and as expected, they didn't lower rates. But there's a little bit more rhetoric around the economy is beginning to slow a little bit, and there may be lower rates in future. But I've checked on the Fed futures, the rate futures, and they're saying that even the next meeting, the next Fed meeting in roughly 6 weeks' time, will also be a hold. I think we're around 83% chance of a hold again on interest rates. So rates are not yet changing, but most likely we may be looking possibly as early as June for another rate reduction. Now, if we start to see another round of rate reductions, That is going to ease monetary policy. It's going to boost liquidity in the system. It's going to mean there's more money available to invest into risk assets. And that will, of course, mean a pump in asset prices. I think Bitcoin, Solana, Ethereum, Litecoin, XRP, these major assets I think are going to pump, but I think also a lot of the altcoins. And one of my particular favorites at the moment is WIF. Again, we appear to be in the same sort of situation here. This movement up looks corrective to me. And I think it's in 3 waves again. If we, I won't bother labeling it right now, but from the low point here, you can see we've got some kind of wave up here, which is maybe 3 waves higher, 3 waves down, maybe 3 waves up again. So it'd be a WXY corrective wave, and then we'll get further downside to come. But after that, I think we're going to see some decent upside, some serious upside for WIF. So that's a really good one.
Now, what does WIF stand for?
Oh, it's the dog, isn't it? Dog with hat.
Okay, that's what I thought. Yeah. Okay.
Yeah. So I know it's crazy, but
I'm like, is he really talking about dog with hat?
Yeah, but it's it doesn't matter what it is, to be honest.
Well, no, it has a massive community, and there's a lot of money behind that. There's a lot of money behind it. It started out that way. It is what it is. That's a
I mean, community is really, really important. I mean, I'll just jump over. I wasn't going to talk about this, but I will talk about it because Jasmy is one I've talked about, and I've talked about this. I'll scroll back out a bit so we can see. I was talking about Jasmy has touched this long-term support, this upper dotted line here, touched it so many times. It's a great risk reward. Every time it got near this support, good time to buy with the stop loss just below. So it just shows here why you put your stop loss just below, because actually it plunged through support. And the reason behind this was that Binance are potentially going to delist Jasmy, which is obviously a big, big negative for it. So Jasmy has a massive community. I mean, the support for Jasmy is unbelievable out there. But when you get negative news like that Binance are potentially going to delist, then we got a breakthrough. Now, what happens is this was long held support, so it was hard to break through. So you put your stop loss just below, and obviously you would have got stopped out. You'd made a small loss here. But now, what was support then turns to become resistance. So support from falling through, but once it's fallen through, it then becomes resistance to moving higher. So then when price moved up and retested and tested what was then overhead resistance, that was the time to potentially short it with a stop loss just above in this case. And we can see prices move down quite rapidly now. So there is now resistance to moving higher. And I actually think that this is really negative news for Jasmy, the fact that Binance are potentially delisting. I think they have a voting mechanism now, Binance, for delisting, which maybe makes it a little bit fairer, but it's on the list of ones that are potentially going to be delisted. And if they've got a big enough community that will support it, maybe it won't be delisted. But that's the danger, and that's why we've seen the price drop so dramatically there. So
it's a pretty major move from Binance. You'd have to think maybe there's a backstory there, because that's pretty big move.
Yeah, I mean, I think I'm not sure what their criteria are for delisting. I mean, I'm sure it has something to do with the volume, and maybe trading volume had dipped. I mean, we can see there's been a long-term price dip here, so people are becoming a bit disenchanted with it, and a drop in volume. And I guess Binance, they only want to list the coins that have the volume because they're getting, that's how they make the money, of course. So I guess it doesn't make sense for them to hold it. But if the community are going to support it strongly enough, but at the moment, community are losing heart. There's actually a lot of FUD, fear, uncertainty, and doubt going around the community now, especially since we broke that long-term support. So, got to keep an eye on the news there. But as I say, I think WIF is potentially good. And look at it, it's up 7% today. That's WIF I'm talking about.
Yep.
But even Jasmy is up 2.9% today. So a bit of respite, but I think that's off the back potentially. As I say, all these assets are correlated. I think Saylor was back in buying again, buying Bitcoin. As I said, he now holds a couple of $1 billion worth at least. 2.5% of supply is no mean feat.
That's nothing to sneeze at.
Yeah, and all the crypto enthusiasts, they still believe whatever happens, even Solana is potentially risky, even though it's one of the better ones and one of the most used tokens out there. But Bitcoin is something which has real, I think, solid underlying value now. The fact that institutions are buying it in such, so dramatically, and governments as well. I do think that Bitcoin has, is a real good, solid reserve, for basically a store of value, as they say. We've got here ADA, Cardano. Remember the Bitcoin Strategic Reserve, and I think Trump mentioned the potential. And we got this massive Trump pump we got here. And you can see it's been selling off since, because there's been no real follow through, and there's actually no real plan, I don't think, to build a strategic reserve for these other assets. Maybe for Bitcoin. I think certainly for Bitcoin, and maybe for Ethereum. But even there's no actual plan of implementation. So I think we just wait to see what is going to happen there, and what and where.
There's like some secret memo that quote unquote leaked, and it supposedly shows that they're going to start buying, slowly, but it's all just baloney.
But with what?
I think it's baloney. Actually, Lou Kerner, the founder of Crypto Mondays, talked about it on the stage at Bitcoin Palooza the other night. He says, "I told you it was BS. I told you that, this and that." It was funny. It was pretty funny.
Yeah. So just looking in on oil here, we did say, by the way, this dotted line was going to be support, and it has actually been perfect support. The price bounced off there and has pushed a little bit higher. So if oil does, it's good that oil has fallen in a way as it has, because it's less pressure on inflation, and this is the problem for America at the moment, of course, but not just America, rest of the world as well. They've got inflation problems. Inflation is generally higher, but the US has had some better inflation figures recently, coming in better than expected. So that's a good sign, because if inflation is lower, it means there's more chance of lowering interest rates, more money in the system, and more money to buy risk assets. So it's good in a way that we've seen the oil price falling. It means that the cost of doing business is a lot cheaper and potentially less upward pressure on prices. But I do actually think that we've seen unemployment picking up again, and the projections for unemployment are that unemployment is set to rise further in the US. It has been rising gradually, and this brings us to the SARM rule. I've actually got the chart up somewhere, I think. Yeah, the SARM rule. Basically, this reading here tells us that we're likely to have recession probably in 2025. The SARM rule is one of the most accurate predictors of recession. Right back to the 1950s, the SARM rule has accurately predicted every recession that's happened. And right now, it's giving us a prediction that recession is coming in 2025. So that would tell us that unemployment is going to pick up. It tells us that growth is going to slow. But it also tells us that they're going to be maybe printing money again, maybe more QE coming back again in 2025, certainly lower interest rates. This is good for risk assets.
Quantitative easing, printing. We all know it. We feel it. It's going to happen. It's like, it's in the cards. You know what I mean?
Yeah, absolutely. So maybe good for risk assets, but let's just hope it's not too serious a recession. I think there's a lot of dangers swirling around in the world at the moment. We talked about the geopolitical, we talked about the economic, but before the real problems come, I do think we'll get another push in risk assets to give us a new all-time high. These big market corrections usually come from a period of euphoria. We've talked about this before again. When you get this fear and greed index, usually you get these massive corrections when the market is most greedy, extreme greed readings, and that's when you get a correction. Right now, we're not at extreme greed. We've actually had a big correction in Bitcoin from 109,000 to 87,000. We've seen that fear and greed index coming right the way down. So now there's actually room, if not now, maybe in the not too distant future, for a pump in asset prices. And then we'll start to see that greed reading pumping up higher again. and that would be the warning sign that maybe you're set for a turn, because these markets are counterintuitive, really. When everyone's really euphoric and optimistic, that's when you see a downturn, not at times like this when there isn't so much. As I said, there's a lot of negativity swirling around on X. These aren't the times that you actually see a market crash. And they say markets climb a wall of worry, don't they?
Yes.
And there's a bit of a wall of worry out there, and I think markets will probably be climbing again reasonably soon. I just touched briefly on Doge. I know that's one of Bruce's favorites.
Yes.
So I think Doge again looks corrective down. It could correct further down, but again, this is an old chart. I've not changed this chart at all. It's actually quite good sometimes to keep old charts and see what your projection is. But I do expect at some point, obviously I expect it to turn from somewhere around here. We've gone lower, and maybe we'll go a bit lower, but I still think we're going to get a pump because this is corrective movement down. This movement up here overlapped this movement down here, and it's quite a liquid token. So I think the rules will hold. When there isn't liquidity, these rules don't actually hold true, but there's plenty of liquidity with Doge. So this is an overlapping movement here. So it tells me it's corrective. So it tells me we've got a new high to push. We're going to push higher relatively soon. I think just briefly we'll touch on two more assets. SPX, of course. This is quite an interesting one because we've got some divergences. I think we need to go back to the 4 hour to show these divergences properly. But it showed you exactly when to buy and sell. So quite interesting if you're an active trader. So first of all here, we had some regular bearish divergence right at the top here. So it told us to sell the asset. So the regular bearish is basically higher highs in price, lower highs in corresponding RSI, told us to sell here. The next signal we had was regular bullish divergence right from here. So if you had sold up here, you could have held it and you got a signal to close your sell position and then go long to buy here. So here we got lower lows in price and we got corresponding higher lows in RSI. That's regular bullish divergence. So just buy here and look what happened. Lo and behold, the price pushes higher. Now we currently have some hidden bearish divergence in the making. Hidden bearish divergence tells you there's going to be a continuation of the downtrend. So looking at the bigger picture, if there's going to be a continuation of the downtrend, I think this is probably some kind of A wave down, B wave up, and I think there's going to be at some point a C wave to the downside before we get another push to new all-time highs. So it's tracking Bitcoin. There's a great deal of correlation between Bitcoin and the S&P. So we said Bitcoin is probably going to get another push. This is basically an A wave down, B wave up we're in at the moment, and we'll get a further C wave down. It's exactly like Bitcoin. There's real correlation there, and you chart them together, and you'll see that correlation playing out. So A wave down, B wave up, probably a C wave down at some point. Then we're going to push to new all-time highs for the S&P 500. So I think the stock market still have more fuel in the tank, more upside to come, probably off the back of lower interest rates. Interestingly, we do look at dollar yen, and whilst we had this move down in dollar yen, it's a good proxy for risk. You normally get a sell-off in the markets. It's precisely what happened. We've seen a bit of a turn up recently in markets, and we can see the correlation here with the dollar yen pushing higher. So again, that's quite a good sign there that dollar yen is pushing higher. But again, we're probably going to get some further movement down, and that might happen if we start to see further higher interest rates in Japan. They held them just recently, but they're probably going to raise them again reasonably soon. If they raise them, that strengthens the yen and actually pushes this chart further down. That's bad for risk assets. So again, everything's fitting together perfectly. All the different assets, like pieces of a jigsaw, all fitting together perfectly. And then finally, I'd like to just look at gold. We've been so bullish gold, ever since this show started. Yeah. We've actually exceeded now I said this was a sort of minimum expectation. I don't think we've actually finished this move up. I had a minimum expectation for this particular wave in this cycle, but it's only a wave 3. There's still a wave 4 and a wave 5 higher to go. So I'm still bullish gold. I still think there's much more to go with gold. So even if we do get a correction from this, we've still got higher to go short term, but even if we get a correction, there's still more fuel in the tank to go higher yet again. So gold is really bullish, and that just tells us there's plenty of excess liquidity still in the market to push gold higher. So again, I'm very bullish gold still. So, the narrative stays the same right from the beginning of this show. Well over a year ago now, we've been bullish gold, and we're still saying bullish gold. And when something changes, we'll tell you. But for now, there's still plenty more upside. So I think it's good to buy the dips. And I've said, don't chase prices higher, don't buy at the top. But whenever you see a dip like this wave, this nice sort of wave 4 dip here, it was an ABC down, I think, this wave 4. So ABC down tells you corrective, tells you to buy. And if we looked at divergences, we'd have actually found this divergence as well. So it told us to buy exactly the right place to buy, and to buy the dip and to add to your holding. So here again, we've got some kind of wave 1, 2, 3, 4. We've not finished wave 5. So clearly, I think still got a bit higher to go. But as I say, I'm not chasing the highs. I will always wait to buy dips. I think it's sensible to buy the dips. And that's the right way to go. So it's good to be back, Bruce. Good
Yes.
to catch up on things. Great that we've had got a really nice, good, positive start to the week. But I'm not so sure it will hold. So that's why I'm saying I'm not chasing prices higher. I always wait to buy the dips. So I'll wait for the next dip in gold, but also in crypto assets, also in the S&P, in all of these assets. I'm waiting for dips to buy dips, because I still think there's more. We've got new highs, all-time highs to come for a lot of these assets. So it makes sense for me just to buy dips. So I'm really positive. I'm really bullish still with these markets. Long term may be a different matter, but for now, I think we can be positive. So I think that's a good wrap for today. And I'll do some analysis of, maybe some long-term analysis tomorrow, just to give us a bit of a flavor for where we might be going longer term, because I'm not quite so positive longer term, but short term, things are looking good. So thank you, Bruce. Thank you, everybody, for listening in, and look forward to catching up again soon.
Thank you, Matt. We'll see you tomorrow. Cheers.
Great stuff. Cheers.
Great. Matt Dixon with the Market Watch report. Good stuff here. Of course, we have world-class analysis here on the Impact Money Show. A lot going on. I'll tell you what, even in North America, you have Canada's federal election campaign hitting its first full stride today. It's a barn burner. Party leaders are crisscrossing the Maple Leaf Nation, swinging with economic promises that could shake the loony ripple through Toronto's TSX and keep the global traders glued to their screens. This snap election, no coincidence. Of course, the Prime Minister Trudeau called it yesterday to counter Trump's tariff threats. He called it for this election. And this 51st state talk that's been going on. They're not just playing defense, they're rolling out tax tweaks, trade buffers, and industrial incentives to shield their economy from the tariff storm brewing south of the border. Currency desk are eyeballing the Canadian dollar. Will it hold firm or wobble? Stock traders are betting on cross-border fallout. Think Bombardier, Suncor, the big banks. It's a stark reminder, when Canada sneezes, the U.S. catches a cold. That's funny. Usually they say when the U.S. sneezes, the world catches a cold. And the world has a front row seat. Speaking of the U.S., let's zoom into D.C., where we're perched right now. Over the weekend, tensions boiled over. 100 protesters stormed the dealership in Georgetown on Saturday, raging against Elon Musk, Trump's admin role. Musk is helming, of course, the Department of Government Efficiency, DOGE, or Doge as they call it, and he slashed over 100,000 federal jobs, turning DC's vibe into a pressure cooker. Restaurateurs are sweating bullets. 44% fear shutting down in 2025 per a fresh survey, as federal cash dries up and foot traffic thins. Picture empty tables at your favorite Foggy Bottom jaunt. That's a real money bleeding out. It's so true. And that's the part, of course, that a lot of people don't understand of what's going on. And people here in the district are pretty upset. People are mad. It's not just, this or that or the other. It's just the fact that, the restaurateurs and the this and that, and the people don't have the money. So of course it's hard. It's hard on people, and it's hard. So here in the district, I can tell you, everybody is feeling the pinch. Trump is tossing a lifeline. The Senate passes $1.1 billion DC budget fix late last week on a unanimous vote, and it's hitting the House today. Trump's pushing it hard. Fiscal rescue or political flex, either way, it's cash that could juice the city's veins. From DuPont Circle Bistros to the Capitol Hill vendors, markets might tell us soon. Keep an eye on those local REITs and small cap plays. I'll tell you, there's a lot of houses going for sale too. There's a lot of houses going for sale. People moving out. People thinking, oh shoot, I should have sold last year. Now let's talk crypto, because of course it's roaring. We just actually went over that quite a bit. So I'll don't sleep on the old school metals. Of course, like we mentioned, gold is sitting pretty at over 3,000, and silver sitting pretty at over 33. I mean, it is just really something else, as inflation continues to be a big fear. And as we were just talking about with Matt, most of us feel like what's going to happen as this progresses, they're going to just throw in the towel and start printing money again, because that's really the only thing that the Fed knows how to do. And a lot of these people know how to do just print money. You just print money, and that's what they're going to do. Let's pivot to Ukraine, where the war is a pressure cooker on overdrive. Ceasefire talks in Riyadh are heating up. U.S. envoy met Kiev officials yesterday for 5 grueling hours. Russian reps rolled it in today, chasing a 30-day energy strike pause Trump brokered with Putin last Tuesday. But Saturday's drone hit in Kiev, 3 dead, including a child, says the deal's on razor-thin ice. Putin's playing both sides, of course. That's how he rolls. He knows how to play it. North Korea's Kim Jong-un hosted Sergei Shoigu yesterday, doubling down on Moscow's war chest with weapons and cash, while Ukraine's striking back, torching Russia's Engels air base 700 kilometers from the front with a drone strike that lit up the night sky. Germany's tossing $3 billion more into Ukraine's 2025 fight, on top of the €4 billion planned. And the UK's frozen 25 billion pounds in Russian assets since 2022. The markets are twitchy. Energy stability could steady Brent at $71. Gas futures too, but this wobble is keeping traders on edge. Trump's wild cards, the Bitcoin reserve, U.S. stakes in Ukrainian power plants are rattling commodities, though Zelensky's shot that down cold. Russia's lost 3,200 tanks. It's a lot of tanks. Ukraine's down 950, but got 850 from allies. It's brutal. Attrition slog. And your energy bills, your crypto bets, they're all in the crossfire. And of course, then there's Gaza. I'll tell you what, folks. I think history is we're going to look back, and we're going to remember the people who talked about this, what's going on over there, talked about the kids with their legs blown off and their arms blown off, and the ones who are quiet. And people are going to be judged by that. I'll tell you what, we haven't been quiet about it over here. We haven't been quiet about it over here. Maybe we haven't been loud enough. That's for you guys, I guess, to decide. But it's really it's rough. It's rough to watch. It's rough to read. It's rough to watch. It's rough. And it's rough. It's rough all around. On March 17th, Israel's assault killed 404 Palestinians in one day, shattering a 2-month ceasefire with Hamas that started January 19th. Hamas released 36 captives for 2,000 Palestinian prisoners. Then, boom, it's over. Aid's been choked off since March 2nd. Electricity cut March 9th. Hamas calls it a starvation policy. Euromed Human Rights says Israel's blocking blankets, clothes, and basics amid cold weather and tents that barely stand. The UN screaming deepening hunger. Deaths top 61,700 per Gaza's count. Thousands more under the rubble. A UN report from March 13th accuses Israel of genocidal acts, wrecking women's health care, bombing the main IVF clinics, blocking births, while South Africa's International Criminal Judge says the siege and bombs have killed, maimed, or vanished over 170,000 since October 2023. Trump's ethnic cleansing pitch to turn Gaza into Riviera, bar Palestinians return, has Israel's Smotrich saying it's taking shape with the migration administration in the works. Israel's media says voluntary immigration now lets whole families leave. Critics call it coerced expulsion amid hellish conditions. Money-wise, aid blockades, crash local markets, displacement, guts labor, and global commodities jitters. Oil, gas, shipping costs linger like a bad hangover. It's a brutal story. We can't turn away from it. And it's hitting your wallet too. Back to the markets, Asian stocks are flexing, with the Hong Kong Stock Exchange up about 1% on a tech rebound. Tencent and Alibaba are the muscle, clawing back from a 2-session dip. Japan's Nikkei up about 0.7% to 38,100, riding the weaker yen, which is, as we talked about a little bit earlier, 49.71, down 0.4% today. That's a pretty big move for a currency. Yeah, the DXY is down a bit at 0.1, almost flat. Tariff relief in Riyadh talks soften it, but it's a wobble, not a plunge. I'm sorry, I got that wrong. It's not 106, 103.91. It's down about 0.2%, 103.91. They are saying it's going to bounce. We'll see how that works out. AI is ablaze. Reid Hoffman's calling it intelligence amplifier. It's really amazing what we're able to do with AI right now. I mean, I am able to, even just over the last week or two, as we produced the Bitcoin Palooza show, we're going to do another one at BTC Miami. The 3 dates of that are March 27, 28. Really excited about that. That's going to be in Vegas. But the amount of work that we're able to do right now with the help of AIs, I mean, I'm able to do the work that I used to do. I'm like at least 2 or 3 times the work I'm able to get done. And I don't have to hire a lot of people to do stuff. I can just do it with AI. I would have to, of course, work with somebody else to do it, but now I can just work with the AI. It really is interesting how that's working. So here we are. Greenland's ice meets Trump's fire. Bitcoin is still soaring. Tariffs loom. AI and robotics rewrite the game. From DC cherry blossoms to Vegas BTC 2025, money's moving like a freight train. Stick with us. We're unpacking every dollar, every drama. Always a pleasure, guys. We will see you in the morning. See you tomorrow morning. Boom, boom. I have one of my skits right here, ready to go. About 2-bit. 2-bit exchange. If you haven't signed up for 2-bit exchange, you should sign up for 2-bit exchange. It's available here in the US, and it is a really nice platform. Cheers.
Hey, Randy, I got another home run for us, man. This 2-bit exchange is absolutely amazing.
Hey, Bruce, what's up, man? Yeah, why don't you tell me about that 2-bit exchange?
Yeah, that's right. And we're going to be able to list our coins that we want, that we support, and they're going to be on this amazing derivatives platform. It's absolutely awesome.
Derivatives? I love derivatives. I can't wait to be on the trade copy program.
So what I want you to do is set up an account and then send me your UID and let's set you up with a trade copy system and you just let it run. Copy our trades. That's it. Easy peasy.
So you want me to open an account, send you my user ID, and you can hook me up with the trade copy system. I can't wait. Sounds spectacular.
Hey, Matt. Hey, listen, I met with the guys at 2-Bit Exchange while I was in Dubai, and this platform really looks amazing.
Yeah, hi Bruce. Yeah, thank you again for that heads up. I mean, I've looked into this 2-bit platform. It does appear to have everything we're looking for.
Yeah, that's right. 2-Bit, Toobit. They have great liquidity. They have futures platform. There's a lot of functionality that I think you're going to like on there. And they really want to work with us. They want to work with the Impact Money Show. And as you and I both know, if they have a good product and they want to work with us, well, hey, that's half the battle.
I mean, basically, I love that copy trade facility. I love the features on the platform. It's basically very simple to use.
Our viewers only need to set it up to copy our trades, and they just do all the trades that we do. Makes it really easy for people to participate. I think they're going to love it. I'm pretty excited about it.
And yeah, it's definitely going to benefit people. I mean, obviously, with all the years of experience that we can pack into it and people can basically benefit from that. Yeah, I definitely think it's a goer.
Hey, David. Yeah, man, I'm excited about it too. I mean, when you think of the ways that we can help our viewers earn money and be able to participate in the monetary revolution, this 2-Bit platform just opens up all kinds of doors that they don't have right now.
Hey, Bruce, I'm checking out this platform. It's revolutionary.
That's absolutely correct. And the futures platform is amazing. Great liquidity. And the copy trader program, people are going to be able to make the trades exactly when we make them and make the money that we make. It's a win-win for everybody.
Open for U.S. customers, and you can deposit money with a credit or debit card. Doesn't get better than this.
Beautiful. And what do you think we should use as a referral code?
I think we should use Impact Money. That's the one. Impact Money.